How's it going, everyone? This is Chris Talks Crypto, and it is 2026. It is a new year. We have come through 2025, 2024, and we made it to 2026 at this point. So I really want to give a market outlook for the year, pretty much just kind of start the year off and see where we've come from and where we plan on going in the future, just to kind of get a good baseline for what we could potentially have in 2026. So I think this year is going to be a really pivotal year. I think the last 2 years were really much setup years in terms of getting new things in order, whether it be the presidency or whether it be new types of legislation, whether it be formalization of the adoption of crypto, whatever it might be. So I'm not only going to talk about crypto, I'm going to talk about the entire broader market as a whole, and just kind of try to tie it all together so that we can get one cohesive kind of story. So um, as you can see, what I'm looking at right now is 2026. I believe that this is going to be the year of capital rotation. So, what does that mean? So, over the last several decades, I'll really say since about the 70s, there's been a lot of financial engineering for our economic system. So, basically, we've been on fiat currency for a long time, and that has spawned a lot of other industries like derivatives, which has eaten up a lion's share of the total volume of things on the market today. But basically, we've rigged this new financial engineering system that is what we use now. So capital is flowing it's flowing into hard assets and scarce assets. So essentially, anything like gold or Bitcoin or silver or anything that can be not mined with a finite amount possible, it's going to be very valuable moving forward. So this upcoming year, and I think the years following are going to be years to it's going to be a flight to safety, basically a flight to hard assets, and basically anything that's just paper and doesn't have any underlying value is going to it's going to kind of fall off. Not completely, but it will be outperformed by things like commodities and again other hard assets. So that's my overall outlook for 2026. So I'm really betting big on things like metals. I'm betting on Bitcoin. Stocks I think will be stagnant if not down for the year. But we'll talk about that a little bit more as we get into it. Okay, so first, like I said, we're going to go over 2025, like what actually happened. I got a couple slides here to actually walk through step by step, like what were the big players that caused the market in 2026. So the major events in 2025, of course, we started off the year with the U.S. presidential inauguration on January 19th ish, somewhere around MLK Day in early 2025. So that is coming off the heels of the 2024 election. Trump's second term, we're seeing how that's been going. It's been chaotic to say the least. But yeah, that was a huge marker to start the year off. Immediately after that, starting in about February and leading into early April, you had a market crash, Q1 market crash. April, which I mean, this kind of the peak of the crash was around early April when Trump announced the tariffs and the reciprocal tariffs on other nations. So this was really what marked Q1 of 2025. The big narrative for the year was really the interest rate cutting cycle. So the majority of the countries and federal banks in the world have been cutting their interest rates over time. And I got some slides that kind of show that a little bit later. Basel three, we've been on the Basel two system since 2009. Oddly enough, Basel three just got released this year. I want to say it was in July, or I think it was July 1st. I want to say there's a drop. So it really changed the banking regulations. It changed what is considered a tier one asset versus tier three. I think gold got moved up to tier one along with other precious metals. So we'll take a look at that. ISO, I can never say this number right, 20,022 replaced Swift. So that ended up coming into play. It was around the middle of the year. So these both kind of hit at the same time. Basel three and ISO 2022. They've really set up the rails for whatever new financial system that they're going to end up using next. There's already been several remarks saying, "Hey, the old system Swift is really out of whack. It's old. It's dilapidated." And we need to do something new. This is going to be the fix. Crypto, ISO 20,022 compliant tokens, all this. Things like the Big Beautiful Bill, Clarity Act, Genius Act. I'm not going to go in depth here, but these were three big kind of crypto bills and just overall economic bills that got passed throughout the year. There was an expansion in global liquidity in 2025, and we can see that really started at the end of 2024 and leading into this year, going throughout the year. We had the longest government shutdown in U.S. history. The second longest was also under the Trump administration. But we did have that going into October, so that really kind of it rocked things a little bit. Especially here in the U.S. The Bank of Japan resumed rate hikes, so this is very critical. This is the first time that they've really had interest rates this high in decades, and that's showing up in the bond markets and the yields and all this other stuff. So take a look there. I won't really talk about that too much. I think that's like a whole separate video, pretty much. But just know Japan has been a major source of liquidity for the last several decades. We talk about financial engineering over the last several decades, and you can't really tell that story without the story of Japan. And then just overall, like I talked about, geopolitical uncertainty. Like no one really knows like where the coins are gonna fall, like where the chips may fall. But it's just uncertainty at this point. So people are playing it day by day, trying to take a more defensive stance, I think, than rather risk on and offensive. But we'll see how that ends up playing out in the next 6 to 12 months. But right now, I think we will continue to see that geopolitical uncertainty, and that is common when you're in the shifting regime. And we are definitely in a shifting regime right now on several fronts. Okay, so 2025, like the market, who won, who lost? This is a chart basically showing that Bitcoin kicks ass the majority of the time. Like there were very few instances in history where Bitcoin over the last 10 years was not 10 to 15 years was not the best performing asset. This was one of those years. Bitcoin is down about 6 to 8% going into the end of 2025, and I can enlarge this right here. Overall, it has a compound annual growth rate of about 130%. Obviously, these large numbers are pulling that number up, but you can say anywhere between 50 to 100%, and I think that would be fair. The Nasdaq 100, which is your Nasdaq, that will be, that came in at 21%. Large caps were at 18%. U.S. Real Estate Investment Trust were at 3%. The big winner this year was gold. Gold was the big winner, and we're going to talk about that. I believe it's going to continue to win as time goes by, along with other precious metals. So, bond market was up 7%. U.S. cash was 4%, and commodities was 8%. I'm not sure when exactly this mark was taken, but I think this is pretty reflective of the year. So overall, stocks were anywhere between 16 and 20%. Real estate 3%, gold a big 64%, and precious metals 50% plus. And so yeah, that's pretty much who ends up winning this year. I expect if we're looking at this is a very clear pattern. So 1, 2, 3, Bitcoin drop. 1, 2, 3, Bitcoin drop. 1, 2, 3, Bitcoin drop. But this is the first year that's actually broken the pattern. So it's been 1, 2, and then Bitcoin drop, but only 6% versus 66%, 73%, 58%, so on and so forth. I believe that we're going to end up having some type of up year this year with Bitcoin. That's not my it is one of my major focuses over the next 5 years. But in the short term, there are also some other plays as well. So taking a look there again, we're saying the benchmark standard is your stock market. So 20%, so 16 to 20% is your kind of rate to beat for the year. That's your mark. Okay, let's take a look at sectors. So that was like the overall big picture, but now like dialing into the stock market, who actually won on a sector by sector base? And as it seems, like this is the start of the year 2025. What you ended up having was, the start of the year was very quiet. Through February, we start seeing things fall off. Again, I told you this is that Q1 crash. Everything, recovered very quickly back to baseline. Okay, well, we got back up here. This is, scary times are over. And then things really kind of got off to the races. So we look at who actually ended up on top. XTL. So these are the different sectors of the stock market, pretty much. So they're all State Street technology sector ETF, and these are all just comparisons. So XTL, this is telecommunications. XLK, this is the technology sector. XLI, I want to say this is like industrials or materials, and so on and so forth. We see it just kind of gets into the muck and mire down here, where they're all kind of either positive or just ever so slightly negative, but they're not beating the S&P and all this other stuff. So these were the main drivers, and obviously your telecom and information systems, that's going to be your number one for this year. So I mean, really, if you're looking at stocks, I think it's more important to pay attention to key sectors than it is to just pay attention to the broad market overall, because that's how you're really going to overperform, is paying attention to the sectors that are currently winning. and that you believe they are going to win in the future. So right now, for me, that is telecom. And we'll talk about it a little bit later, but I think defense, energy is going to do well this year. I think, as always, tech is going to continue to do well, but the majority of the rest of the stock market, I think, is going to lag and or underperform just overall, based on what I've been seeing as of late. Um, I mean, we got real estate down here, which is at the lowest, so that kind of tracks. That makes sense. Let's take a look at de-dollarization. So what do I mean by de-dollarization? So this is we think about foreign exchange and currencies and all this other stuff. This is a list of all the currency indexes. So you have the US index, the Euro index, the what is B? BXY. I do not know. SXY is the Swedish, and then you have the Japanese, Chinese, Australian. I'm sorry. Okay, so this is Canadian. One of these is Canadian, whatnot. And then you have finally the ZXY, which is New Zealand dollar. What I'm seeing is okay. This line right here is zero. That's your zero line, saying that it's 0% performance. As you increase and the time goes by, we see pretty much everything ended the year positive in terms of currency. So all the currencies appreciated, whether it be New Zealand or, like I said, Chinese, Brazilian, or Australian, Euro, and then Swedish as well. Or this is the Swiss. SXY is the Swiss. But when you see down here, like, what is this? So this is the US dollar index. So this is DXY, the Dixie. And since March, right before, again, kind of like again this Q1 crash, it never recovered. So the U.S. dollar was down 8%. So if you just held dollars this year, you're down 8%, 8.3% going into the end of the year, and rising a little bit. But overall, we can see that we talk about de-dollarization and people getting away from the dollar. That is something that materially happened in 2025 relative to other currencies. So we just see that the dollar was the one that was really kind of the loser this year. So just holding cash at this point is not your best strategy. That's not really the best strategy moving forward. I think a lot of people are going to start getting away from it. There is some merit to having some cash, but having a large majority of your pie sitting in cash just doesn't make a ton of sense to me. But to each his own. This is not financial advice. Another big part of 2025 was the interest rate. So, interest rates affect day to day life. It is the cost of money. How much does it cost to borrow, to transact, to do business? I mean, especially the larger you go, the more and more interest rates really play into a factor. So, again, these are all the interest rates from the federal banks, the central banks around the world, I should say. So GB interest rate, that is INTR, that is the Great British, UK. US is US, and then AAU is Australia, Chinese, CN, New Zealand, Canadian, European, Japanese, and then this is the Swiss. So I see two specific ones here. So I mean, this was coming off 2022. Everyone had dropped rates tremendously going into COVID and all this. A lot of money printing happened. And then there was a huge interest rate hike to stop inflation, to hold back inflation. A long period of pausing, and you saw that in all these assets. All these interest rates, they paused for a while, for a period of really early 2023 all the way through 2024, and then they all in unison started dropping. So now we're in what I would call an interest rate cutting cycle, where around the world liquidity conditions are improving. You are seeing cheaper money, cheaper borrowing ability, and so on and so forth. So I mean that deals into credit card rates, mortgage rates, auto loans, all that type of stuff. So CH, this is Swiss francs. So we can see here. So the two interesting ones on here are the Swiss interest rate, which was negative. It was like negative 0.75 versus the red one, Japanese, which has historically always been like, negative zero point 0.1. We see it didn't move this entire time. It was already super low. Didn't move, didn't move, didn't move. And then for the first time in years, Japan started hiking their interest rates. I said Japan is important just because for the last several years, it says several decades, not years, there has been what we call the yen carry trade, where, long story short, essentially people borrow in yen, they trade it in for dollars, and then invest those dollars into assets, pocket the difference on the interest rate. So again, if the U.S. interest rate is up here at 5% and the Japanese interest rate is down here at like 0.1%, I can borrow it like 0.1, 2%, and then get a yield over here at 5.5, 7%, so on and so forth in US dollars. So it's just you're playing. It's an arbitrage game, but that only works the farther that this gap is apart. If this gap is very far apart, hey, this trade works very well. If as this gap starts to close, this trade does not work as well. So Japan for a long time was a source of cheap liquidity for the entire market. So all these people, they use the Japanese yen to bolster their liquidity, but overall they're going to have to eventually pay that back at what I see is what are higher interest rates for the Japanese yen. So it's definitely interesting to see for sure. We're looking at this point, and actually they hiked one more time. They've already hiked up to I want to say 0.75. The Japanese yen has. So these are converging. That trade is closing. It will unwind. It will have ripple effects down the line. Okay, so the 2025 overall winners, metals. It was straight up metals, like nothing else. So you have a couple ones here. This blue one up top is silver. The green one below it is platinum. PA orange is palladium. Gold is this gold one, 69%. HG is your copper, and AL is your aluminum. So I'm looking at here from the start of 2025. It was relatively quiet all the way until July, June, July. It kind of started taking off in April, but not in a huge way. I mean, gold was up like silver was up like 50-some%. The big thing right here for copper, there was like some type of tariff announcement which dropped the price like 50% pretty rapidly, and then it recovered somewhat. But that was something that put a damper on copper because otherwise it was in second place for a while, and then it just kind of lost out for a while. But overall, the number one winner was silver, platinum following close behind, palladium very close second. I mean, a close third at 102%, 140%, 160. Gold at a nice 69%. Again, largest asset in the world at this point, even larger than the dollar. So yeah, I mean, long story short, this is what I'm going to be. This is what I'm going to be with for the next probably 2 or 3 years is just metals. Metals, again, hard assets, things that need to be mined, that are physical, that have a physical limitation to how much that they can produce, refine, all this other type of stuff. This is where you're going to win. And I think about this also in terms of policy, like the way that things are going at this point. There is a push for infrastructure. There's a push for, we talk about robotics and AI. AI being these large language models is the software level. But if they're talking about integration into the real world, we're talking drones, we're talking robots, we're talking self-driving cars, we're talking all types of autonomous systems and interconnected systems. You need metals. You need metals. You need metals for solar cells. You need metals for energy. You need just there's so many industrial real world applications on top of the demand for just a hard piece of collateral, pretty much. I mean, people are this is a flight to safety, so they know that gold is real. They know that platinum's real, silver's real. You can hold it, you can verify, you can test it. Hey, this is real. So people are holding it and they're getting it because again, they don't trust the dollar. We saw earlier, and I'll go back to it, the de-dollarization. So that came in here to where people have completely not abandoned the dollar because that hasn't happened. But the dollar did lose 8%, objectively did lose 8% of its value in the first 4 months of the year and never recovered. So if you held the dollar the whole time in 2025, you kind of lost. But yeah, that's the big story. Pay attention to the metals market. Um, Base metals, industrial metals, precious metals, all the ones that are consumables and things of that nature. These are really going to be the ones that outperform. And I think this trend is going to continue, and if not intensify. Um, because the year prior, I want to say gold did about it did similar numbers in previous years, but that's the big takeaway. Metals are the big winner right now. Another thing that we look at continuously is global liquidity. So, like, what does that mean? So, M2 global Federal Reserve balances, and how does that grow over time? So, I'm looking at. I don't know if I cut off the bottom. Okay, I didn't cut off the bottom. This is, if I'm just looking at the timeline, this pink line is the actual global liquidity line. And like I said, over a long time, it really just ranged from, you had this huge run up in 2020 when they printed out all this money, and then it just kind of stagnated here. We see that that lines up with the year over year growth. It just, not really any growth in global liquidity. 2024, this is 2025, somewhere in here. And then, it really just went off to the races again. We have restarted that printer. I think a lot of that's coming from China, not as much from the US, but I think that's going to change as well with the US beginning to ease global liquidity. Well, they're starting quantitative easing now, as opposed to quantitative tightening, which has been the regime since about 2022, and so on and so forth. Um, I look at too, like there were specific times where the market actually boomed. So you saw it going up in 2023, 2013, 2014. If you were paying attention for Bitcoin, at least, it had a move here, and there was another move here in 2021. You didn't have that same type of thing here. If the expectation was that the market comes down, rebounds, and then comes up, but we see like there's kind of a missing thing here. Not that it's missing, I just don't think it's happened yet. So that's really what I'm looking at. I'm looking for this trend to continue with global monetary policy. As we see, all of from the interest rates, they're all moving in unison. They're moving in unison in terms of, this is where money gets scarce, this is where money gets loose, and money is getting more and more loose as time goes by. So liquidity conditions are improving, but I think they will peak sometime in 2026, 2027, as we move forward. Okay, so what about Bitcoin? This is Chris Talks Crypto. I've been talking about Bitcoin for 140 weeks. I am not doing these weekly forecasts anymore. I get the picture. I think everyone else gets the picture too. But for me, it's really just a way to follow the market. I'm definitely glad that I've done it so far. But I think I'm going to transition more to like a monthly, if not quarterly, kind of approach to it. But really, I started over here. I started talking about Bitcoin in really after this candle, somewhere around this candle. It was like 20,000, 25,000, and it was stagnant for a long time. And then liquidity conditions started to improve, and the entire market went up. In going into 2024, you had the ETFs going stagnant, another run up, and then really just, this is what I call $100,000 hell. It was, you got to 100,000. That's this gold line, and it just, let me zoom in here for a second. It just bounced around for the entire time. It sunk below. Okay, that's normal. Got above it. Tried to get higher and higher. Couldn't do it. October 10th, you had a huge crash coming into crypto. And I talked about on several occasions this $85,000 level, and it went down there perfectly. So that's good to see. What I think we'll see is a fake out. I think we will see a fake out here. Two things. So this is a weekly chart. Down here, I don't know, it's very faint. I don't know if you can see it, but there was a cross of these white and blue lines. That's the 21 and 50 week moving average. So, we see they haven't touched since. They're finally about to touch again. So that is bearish in my mind. I think what we'll end up seeing is some type of, try to retest here of 100,000, then a slam down to, really probably the 200 week moving average, somewhere between 75 and 75,000. And then there will be a recovery, maybe just like a stair step up, get above 100,000 again, and then I think from there things start to go up. So from 75,000 up to potentially 150, I think we could see another double in Bitcoin this year, if not higher. So I think this is a major flush out. Again, institutions have been adopting since here. Then you had the presidential election at the end of the year, which was really like a countrywide acceptance of Bitcoin. And this has just been like, it's a lot of institutional games to kind of flesh things out. But this is what my path for Bitcoin is going to be if I had to draw it. And it could very well just go straight back up, but I don't think so. Everything to me here looks pretty bullish. I'm sorry, bearish. It looks pretty bearish for right now, but I think that's just to flush the remaining liquidity out of the system. So we'll see how that ends up turning out. Yeah, so this crypto cycle, as well as the stock market cycle, has been muted. So I talked about on the liquidity thing earlier, and this all kind of plays into each other. This is the ISM manufacturing PMI. PMI is your purchasing managers index. So this is basically saying that they interview different purchasing managers, and they're looking for expansion and contraction. So anything below 50 is considered contraction. Anything above 50 is considered expansion. The manufacturing index has not been expanding since 2022. Actually, it really has not. It had a little brief peak up here right after the election. A little run up, but if we look at how Bitcoin moved, it had a bull market in 2023. I'm sorry, 2013. It came down, and then it had another one that peaked in early 2018. Well, guess what else peaked in 2018? You had COVID, and then Bitcoin and crypto peaked somewhere around 2021, 2022. This also peaked here. You see, it never really got higher than that after this kind of beginning of the year run up. And then ever since then, it's been down in the doldrums. So to say that Bitcoin has performed, I don't know, 150% twice in 2 years, like that's pretty good considering that it did not have the conditions to move it like it did in the past. Bitcoin's job is essentially to absorb excess liquidity. So it's a hedge against inflation. And it performed that spectacularly. We're still dealing with inflation from this pretty big bubble that we printed all this money from. And I think that Bitcoin it's still one of my top assets for sure. Definitely for the next 3 to 5 years, and really more like 10 years before it's really just petered out. There's nothing there. But the earlier you get in, the better. This is one of those assets that's not going away. They've made that very clear at this point. But what I'm saying is Bitcoin still outperforms, despite the conditions that would lead it to performing even better. Um, and along with talking about Bitcoin, it has transitioned to a major financial instrument. So this is from River. They're a Bitcoin kind of research company and I think holding company too. But they put out a lot of good research, a lot of good graphics. This is one that I really like back from August. This is the average daily Bitcoin flow dynamic. So really, what we're seeing now, more so than anything, is there are a lot of individuals and wallets that are selling Bitcoin. Individuals are selling Bitcoin. You have to count this as the Bitcoin left to be mined because that's the supply side. This is supply side as well for your outflows. More supply being added to the books. You have lost Bitcoin. They're approximately 14 per day. Bitcoin treasury companies has been a huge kind of narrative in 2025. Conventional businesses, mom and pop shops, or whatever type of businesses attempt adopting Bitcoin. Funds and ETFs. So I mean, you have the big players like BlackRock. You have Fidelity, Arc, so on and so forth. All these funds and hedge funds and ETFs, they are accumulating Bitcoin at a very fast rate. Things like Strategy, 21 Capital are your Bitcoin treasury companies. Conventional businesses, GameStop is one of them, who has adopted Bitcoin on their balance sheet. But this is going to accelerate in the future, especially as we see more de-dollarization and more debasement of our currency. I don't think that trend is going to stop. We see governments now on the list too. So really, this has become an institutional asset. If you want to trade it with the institutions, you should be buying right now. I think a lot of these individuals are more so like kind of early day investors, people who got in 2017 or 2020. Right now, 2025 was really just an equilibrium year. It was about just balancing the new, I don't know, I guess regime. What I'm looking at right here is eventually the individuals run out of Bitcoin. And that's just a fact. They run out of Bitcoin, especially as it gets more and more distributed over here, and as this side grows. I know for a fact because the halving is going to happen in about 2 years. This number is going to get cut in half, and this number is going to shrink as well. This number on this, these numbers on this side are going to grow. So overall, that leads to an imbalance in supply and demand, which is going to lead to an increased price, which is the overall message for Bitcoin. So nothing has changed about my original thesis. I still absolutely love the asset. I think it's going to do great things in the future. The timeline has just extended a little bit, but that's no concern because I plan on being in this for a long time. So. Bitcoin ownership distribution. This is the same thing. I'm not going to say all this much, but we look at really who owns Bitcoin. You have Satoshi Nakamoto, lost Bitcoin. We talked about that on the other page. Like how many Bitcoin? A lot of these are from early days, are just straight up lost. Like when people had tens of thousands of Bitcoins and it wasn't really worth anything, and they're just it's a Bitcoin, get rid of it. Or they lost their seed phrase in like the landfill. I mean, we've heard about that one, so on and so forth. We've seen governments get their hands, funds and ETFs, businesses. The big block is the individuals, and like this is kind of misleading because it looks like, oh well, yeah, the people have so much Bitcoin. This is concentrated into, again, probably earlier investors who have 14 million. And I'd say, like, I don't know, probably new investors are probably somewhere in here, this sliver. The rest of this is probably early days stuff. So yeah, that's really kind of the gist of like who owns Bitcoin. And again, I think we're going to see, and this is all that's left to be mined. So everyone, all of these people are fighting over this little sliver right here. They're fighting over this sliver, and to eat into this. So these people, the businesses, the funds, the governments, the ETFs, they're eating from two places. They're eating from to be mined, which is the smaller pieces of the pie, and they're really eating from individuals as well. Satoshi's, that's not going to be touched. Loss is just loss. So you have less than 21 million Bitcoin really, that are actually viable, and that can be moved and do all other things. So, yeah, just expect the price to go up as time goes by. You'll see some down moves, but overall the direction is up. And that leads me into saying, hey, there's less and less Bitcoin available every day. It would not be right unless I spent a decent amount of time talking about Bitcoin, but I think this is one of the most important charts for people to understand, just because of the fact that this is the Bitcoin exchange reserve. So, how many Bitcoin are on all of the exchanges across the world? So, whether that be Coinbase or Kraken or Gemini or crypto.com, so on and so forth, Binance, they're looking at all these. And what it looks like is, 2023, it's flat, just kind of ranging. It's somewhere between 3.1, 3.2 mil, ranging. And then in 2020, April 19th, I want to say somewhere in here, this was the halving. The halving happened, and now they went from producing 900 Bitcoin a day to producing 450 a day. So that cuts the supply in half. So, okay, now the demand increases. Hey, well, there's not as many coming to the exchanges anymore. So this number starts to drop. ETFs were somewhere around here, so that was a double whammy. So now institutions are buying big here. The halving happened right here, and in late 2024, the presidential election happened, and America, we can say America adopted Bitcoin at this point. Maybe not fully, but this is the start of the adoption phase for all of America. And we see it just fell off a cliff. And a little bit of pause here, it fell off a cliff, so on and so forth. And even as prices dropping and Bitcoin is, quote unquote, becoming less popular, the amount of Bitcoin available is still dropping. So if we're talking purely supply and demand, if the supply is dropping, the demand, as I've talked about, is gradually rising. That means price must go up. It may be delayed, but there is an eventual price release that has to happen here, because there is a fixed number of supply, and it is not only that, it's a supply that everyone can see. Everyone can see this supply, and it's visible to all. So there's not as much trickery as you can do with like gold, or having fake gold, or metals and all this other stuff. It's you can't play as many of the paper games with Bitcoin as you can with other assets. So again, I think this is one of the most important charts to understand for Bitcoin and the broader crypto market, but Bitcoin especially. Okay, so I talked about, this is a year of capital rotation. So we talked about metals already. We talked about the stock market. We talked about Bitcoin. But what I'm really seeing is, so this is actually a chart of the Nasdaq, which is your main stock market. You have the S&P, the Nasdaq, and the Dow Jones Industrial Average, Dow 30. This is the Nasdaq returns divided by the gold returns. And when this chart is going up, that means the Nasdaq is doing better than gold. When this chart is going down, that means gold is doing better. When it goes up, Nasdaq, down, gold. So as we can see from early 2000s, gold was where you wanted to be at. You wanted to be in gold for pretty much all the 2000s. For the 2010s, you wanted to be in stocks all the way through 2020 and up until 2021. And now we're in that transition phase. So now it has gone from, okay, I want to be in stocks, to realistically, hey, I want to be in gold here. Stocks was cool in going through 2024, but now really it's been an all gold show since 2024, really. And now we're at this point of this major low in what is this? This is the two, and this is the monthly chart too. So this is huge. This is going all the way again back to 2000. If it breaks the 200-month moving average, this is going to fall dramatically, and gold is going to be the outperformer. So it's not that I think that gold is so great. I'm just following the trend at this point. And again, we talked about these crossing blue lines. I use these on almost every chart that I use. You end up seeing that we had a cross. If the white line is above the blue line, that means it's going up. If the white line is below the blue line, that generally means it's going down. You had the first cross in a decade. This is the first cross that's happened in a decade on a monthly chart. That is a signal. That is a signal for sure. And this happened in, um, I guess that was like December or November of 2025. Leading into 2026, you had that cross, and now we're just going to continue to move down. I'm pretty confident in that at this point. So I say all that to say, what is my 2026 outlook and expectation? So if I had to break it down into 6 points, as I've said so far, metals will continue to outperform. I still think silver is going to be the biggest winner, only because silver has been suppressed for a long time. Silver has been the typical silver to gold price ratio is about 1 to 10 or 1 to 15. It's like 1 to 50 at this point. So it's really suppressed. And when you compress something down, eventually, if you hold it there, it's going to have to spring back up. So there's going to be a springing period for silver. And I think that's going to happen in the next 2 years. And I believe it's actually already started. So we'll see how that ends up looking. Capital rotation away from equities to hard assets. That was this last slide. Hey, there was a gold period. There's a stocks period. We're going back into a gold period, and we actually already are in a gold period. Like you kind of say, okay, well, it's still ranging here. Once it broke down here, okay, that was the first sign. The second sign was when it tried to go back above but couldn't. That's the second sign. And now I really do think gold is just going to continue to outperform in a big way. Miners will be the big winners this year. And so when I say miners, I'm talking about anyone who gets it out the ground, like get it out the mud. Energy miners. So I'm talking about the petroleum companies, the people who are getting into crude oil extraction, metal miners, so silver miners, gold miners, copper miners, um, platinum and palladium, Bitcoin miners. All these people are going to win very hard because they're the ones who are producing these hard assets. You're just going further and further up the food chain to see like, okay, well, what's the supply chain and how do we get it here? You got to play for the miners, and that's I think that's a safe bet. I think Bitcoin will hit new all-time highs at or above 200,000. And crypto protocols with utility will thrive. What do I mean by that? So things like loans, things like liquidity pools, things that actually produce some type of value in the world, stable coins, all those are going to come into play in a big way this year, especially as crypto gets more and more legitimized. You're going to see what I would consider a lot less of the nonsense. Prediction markets, that's another big crypto deal that's been out as of late, and it's new, and I think it's really going to take over a lot of places. So if there is major utility there in crypto, I think it's going to do well. A lot of the silliness, I think, is going to go away. As time goes by, I think we're going to contract into a few major blockchains and protocols. That's honestly not surprising. There's not a ton of need for blockchains on blockchains on blockchains. Just the key ones that work for a lot of people and are scalable to the world, really. So we talked about de-dollarization with that was supposed to say well. So yeah, de-dollarization will accelerate as interest rates change. So we talked about interest rates back. I don't know where it was at, but interest rates have been changing. So as all of the interest rates change and they lower, and I don't see them going up pretty soon because like they've been up and paused for quite some time. They're gonna come down eventually. Um, as they start to drop, people will be there's a lower interest rate, so there's literally a lower interest. Less people are interested in it. That will lead to people moving more and more away from the dollar as itself. Even Warren Buffett. Warren Buffett has moved, it's like 300 something $billion into the Japanese yen because it is showing more signs of strength than what some of these other currencies are showing. So it is. I just think it's a safe bet to assume that the de-dollarization will continue and that it's not just a passing fad. And the last thing that I'll talk about is basically I do think that there will be some type of correction. I don't think it'll be a crash like 2008 to where we just had multi-year lows and whatnot. I think there will be some type of systemic unwinding, whether it be from the yen carry trade, silver is putting major pressure on the system because, again, they've compressed it for so long. When something rebounds, it has a tendency to kind of jostle things around and break some things. So silver is a risk for the system. They want to try to compress that as much as possible. The yen carry trade, again, there's a lot of money, probably trillions of dollars put into this, that they want to try to unwind this as slowly as possible if the interest rates are going in a different direction. Um, but ultimately, I think what's going to end up happening, and they've already said it, they've ended quantitative easing as of December 1st. I'm sorry, quantitative tightening. So they've started quantitative easing, meaning monetary conditions are getting better. Um, they're more likely to print more money at this point, and they will step in to stabilize the markets if need be. So I think we'll see some type of correction. I would probably think of the first half of the year before going to new all-time highs with a refreshed liquidity. So we'll see how that turns out. I'm really excited for 2026. My primary focus is going to be swing trading and day trading the markets, and just playing it day by day, sector by sector, wave by wave, until you come up with profit. So I'm an absolute firm believer that there are going to be some monumental opportunities for profit gain over the next, not only 2026 but 2027 to 2028 as well. Um, as we move on past that, question marks. I'm really my whatever theses that I have. They generally only last about a year or two. I try to play it year to year. The whole concept historically in investing was, hey, we're going to hold something for 40 years in stock market. I think that made sense for a while, but I think the rules have changed at this point to where it's more important to pay attention to what is booming at the moment. We have the tools, we have the technology, we have the information speed to be able to capture that in real time, and not have to wait for 5 years for an investment to play out. I mean, I'm really quarter to quarter, year to year, just playing with the assets that are doing the best. But right now, I think as of the next 3 years, it will really be those hard assets, and you'll see some type of rotation into the hard assets as opposed to all this flimsy paper stuff that we've been using for so long. So, we'll go ahead and wrap that up. This has been Chris Sauce Crypto again. Check on any crypto-based resources on chrissaucecrypto.com, and I will see you all on the moon, whether it be the metal moon or the Bitcoin moon. Who knows? So yeah, you can contact with me on Instagram, YouTube, website, chrissaucecrypto.com, and like I said, y'all, we'll see how this ends up playing out by the end of the year. I'll see you on the moon. Take care. Bye bye.